Hi everyone, and welcome to the Buffett and Beyond Research Saturday ETF report. And we want to report that the top stocks in the QQQ ETF are up 48.5%. And folks, we're going over the home builders toward the end of this, and we want to show you where the home builders ETF went down 30%. Our top stocks actually went up 1%, but that's a pretty big move there, folks. And so we're going to look at those home building stocks, which we haven't looked at in a long time. This is December 14, 2024. The month is half over. We're coming into the end in the holidays. And folks, remember, if you want to live on the beach like Jimmy Buffett once did, you've got to invest better than Warren Buffett does now. And let's look at the QQQs, and we can see that the QQQs are making higher highs, but the indicator up here, the short-term indicator, making lower highs. So that's our first signal, the very short-term signal, a first signal that, okay, something may be wrong in here. However, down here, the intermediate-term indicator is still pointing up. But let's go to the Dow, and boy, we showed this during the week. The Dow is just not doing so well at all. Again, higher highs in here, lower lows up here, and then the market just went on a downturn, and we're looking at 8 out of the past 9 days. The Dow has been down, fell through the 20-day moving average, and look where we're going now. And of course, we will look at this a little bit closer in our Saturday market letter. But look at down here, the intermediate term indicator is definitely pointing down. So we're having a hard time with the Dow Jones. And remember, in one of the letters during the week, I said for our professional subscription, we gave a sell signal on the Dow, and that's SDOW. So it's double Dow, or in other words, 2 times the inverse of the Dow. So you buy the SDOW, now you're short the Dow, double. And that's what we told our professional subscription to do on Friday. And then just yesterday we gave a sell signal to our regular subscribers, and we'll show you why in a second. And here's that why in a second, because we look at the transports, and boy, the transports tell us, give us an indication of how the goods are moving, how raw materials are moving to the manufacturers, and then how the manufacturers ship to the retailers, and how the retailers ship to us. So everything has to do with transportation. And so a lot of people, a lot of technicians look at the transportations and say, okay, the market is going to follow the transportations, because if the transportation stocks are slowing down, that means the economy is slowing down. And that's what we see down here. The intermediate term indicator is pointing down. But up here, we may be getting a little reprieve right around here. And don't forget, the transports are sitting just below the 50-day moving average. So I'm reporting this on Friday morning before the market opens, and we'll see if the transports will come and try to attack this 50-day moving average right in here. And it did on yesterday, so that was Thursday. On Wednesday, it had closed under, and you can see right here, and then Thursday it tried to go up and break through that, and it closed toward the low of the day right in here. And we'll see what happens today, folks. But don't forget, in a couple of days, the Fed meets, and the market expects them to lower interest rates by at least 1/4 point. All right, let's look at the S&P 500. We see the same type of thing. We see the higher highs in here, and we see the lower highs up here. But down here, look at this. Let's look at this close, and we can see it looks like this black line has crossed over the red line. That's a sell signal, but we'll see what happens by the end of the day today. And I'm recording this Friday morning before the market opens. All right, let's look at the technology sector. That's the XLK that we look at. We could see the same type of thing, the lower highs here. All the way down here, we can see it's flat, and here the stocks are just hanging around that 20-day moving average in here, and so it's not giving us any indication one way or the other. Same with the semiconductors. They're above their 20-day moving average, but we're still seeing those lower highs in here, and it does look like this black line wants to turn down a little bit, but maybe I'm just looking at it and hoping that it doesn't, and we'll see what happens with these stocks as we go along. So the healthcare has been in the news this week because of the shooting of one of the executives of one of the big healthcare companies. And then all of a sudden Congress comes out and says, we want to break up these big healthcare companies because they control the development of the drugs, they control the sale of the drugs, they control the distribution of all these stocks, or all these drugs, I should say. And so when that came out, the healthcare really hit the skids, and we had a chart on that, I think it was on Thursday, that showed how some of these stocks dropped 12 and 13% just on that news. So we're coming down here, reaching a critical point at a previous bottom from November, the middle of November, so about a month ago. We're looking right in here. And folks, we will just see what happens. And this intermediate indicator turned down, already oversold. So we're looking at some kind of bounce in here, and then all of a sudden that news came out and it turned this indicator right down, or the CTF right down. And the utilities, remember how good the utilities were doing? Well, that's when interest rates were rising, so people were jumping into fixed income instruments to lock in those relatively high interest rates. And then all of a sudden, the past 2 weeks, the interest rates have been coming down, and so they've been selling off the utilities and saying, let's get into some of these growth stocks. And you can see down here that we are headed down as we speak right in here. But if we come back up here, we can see that we are testing this previous bottom again back in November, and we'll see what happens with the interest rates on, well, Wednesday. Fed Chief Powell should be coming out and telling us something right around 2 o'clock, and then he answers questions at 2:30, and we'll see what the Fed does and what they're thinking of what's going to happen right after the new year. That's the important part, and that's what everybody will be listening for. So here we are with the utilities. We're testing this. That means we're testing interest rates. If interest rates keep going down and the Fed talks dovishly, then these might turn around again. So we'll see. Now let's look at the sector stars. Now, these are some of the best ETFs. And you're going to see a chart in a second, but these are the ETFs that do as well or better than the Dow over time, and then we'll pick some of the stocks from the best ETFs and we put them in a portfolio such as this. And we can see that Advanced Micro Devices is a stock that we are looking at. We're not sure if we're going to keep it in our portfolios or not. We'll know over the weekend, because the numbers on Advanced Micro look very, very good, even though the stock has done terrible this year, with the market up 27%, QQQ's up 28.9%, and yet Advanced Micro, which is such a good stock and has good numbers, and we're looking at that in the weekly Saturday report. So we'll look at this stock right here, and then we're looking at CDW. And so the stocks that I have marked in blue, Lam Research and Lattice Semiconductors, we're looking at. We're definitely taking Lattice out of our portfolio. So we'll see what the new 2025 portfolios look like in a few days. And Monolithic Power, boy, those numbers still look good on this stock, but it just hasn't performed very well. But here's what I'm looking at. The top stocks in our Sector Stars ETF is up 39.7%, while the S&P is up 27%. That's a big difference, folks, and this is a pretty well-diversified portfolio. So 3 weeks ago, we were up 31.8%. Now we're up 39.7%. And so this portfolio is doing very, very nice. But you want to see an even better portfolio? Let's go to the top stocks in the NASDAQ 100, and we can see the QQQs again. just like the last chart, up 28.9%. The S&P up 27.2%. Our top stocks are up 48.5%. 3 weeks ago, they were up 41%. Now they're up 48.5%. Again, which stocks are we looking at? Lam Research, which we might take out of the portfolio. We're looking at Advanced Micro Devices, which we will probably keep in the portfolio, and that's just my thinking right now, so I have to do more work on these stocks over the weekend, and we'll see early next week or in the middle of next week what all these portfolios for 2025 will contain, because, folks, we continue to outperform the S&P 500, and remember, 96% of the professional portfolio managers out of there that follow the publicly traded mutual fund, 96% cannot outperform this S&P 500 over any 10-year period. And why is that? Well, because the S&P will change 20 or 30 stocks each year. It's a moving target. They kick out the dogs and they put in the good stocks. So that's what this index does. It's a moving star. But when we get into the ETFs, those stocks primarily stay the same because they're not putting new stocks in and taking old stocks out. It's all the stocks in a particular industry. So the ETFs are actually easier to outperform when you pick the top stocks in the ETF than when you pick the top stocks in the S&P 500. And we've been outperforming the S&P 500 over 2.5 to 1 over the past 22 years. That's some track record, folks. Nobody else puts out their track record for a period of that long of a time. Again, S&P up 27.2%, our top stocks in the NASDAQ 100. We have a dozen of them right now, and up 48.5%. Not too bad, folks. 3 weeks ago, it was up 41.8%. These are phenomenal numbers, by the way, and these stocks are up over 400% over the past 5 years. And when I say over 400%, I'm looking at 450% with these new numbers out. So these stocks are returning a lot. The portfolios are more volatile than the S&P 500, but boy, oh boy, on the upside, these are the stocks that are making the most money. That's why they perform better. They're making the most money. They're making the most consistent money. And look what you have in here. You have Google. You have your Amazon. You have your Meta. You have your Netflix. You have NVIDIA. So you have all the stocks that are making money. That's why we outperform. We just have to identify those stocks. And let's look at the home builders just before we end this. I want to look at the home builders over 5 years. Black line is the S&P 500. We can see the home builders outperformed for 20 and 21. This is 2022 when we had a tough market. The S&P was down 19.6%. The NASDAQ was down 34%. And our home building stocks really dropped in there. But boy, oh boy, right toward the end of 2022, and this is 2022 in here, these stocks took off like a rocket. Let's see what our top stocks in the home builders have done. Well, now let's go back to the end of September. So we're looking at October, November, and half of December. We were at up 31.9%. This is the ETF. Now we're at 21.4%. That's a 10% percentage points drop. You take that 10% drop divided by where you're starting at 31%. That's a 30% decline in the home builders ETF. Now, what did our top stocks do? Our top stocks actually gained 1%, almost 1 percentage points, while the ETF itself fell 30%. Again, folks, the ETF itself fell 30% over the past almost 3 months, while our top stocks actually went up 1%. So when you pick the top stocks, you're doing pretty well in here, folks. So this portfolio did not budge except a little to the upside, while the home builders declined. Now, the Dow did go up. The Dow was at 20.6%, back in the end of September, and now it's up to 26.9% as of the beginning, as of the opening on Friday, which was the 13th. So the S&P was up, the home builders were down, and that's a lot of that had to do with interest rates rising for a little while there. But Wednesday we expect the Fed to drop the interest rates, but it's what the Fed is going to say about the future. So home builders, even with the home builders, and we have a couple of these stocks in our All-Stars portfolio. That's why the All-Stars portfolio is doing so well, outperforming the S&P 500 by about 20% or so. So we're doing good on all ends. You've got to be able to select the best stocks out of any ETF, any mutual fund, any index, and our research continues to show, and our actual portfolios continue to show, that we outperform the S&P 500 and we outperform the ETFs as long as you pick the above average stocks in those indices. So what's our motto? We want to pick the best performing stocks or the above average stocks in any index or mutual fund or ETF, and we'll leave the stocks that are underperforming, the below average stocks, for somebody else to buy. It's that simple. You just have to have a method of selecting which are the most consistent and which are the fastest growing in earnings stocks in those areas. And that's why we use this term called clean surplus accounting, which we've written a book on, a doctoral dissertation. That's how we learned about it. And folks, it has been performing very well for us over the past 22 years. So folks, we've had a rough week this week because we didn't know what the market was going to do. It was having all kinds of fits, especially the Dow, just on a downtrend there. And it looks like the market wants to roll over in here. It's got the euphoria of the election out of the way. And we'll see what Fed Chief Powell can do to the market on Wednesday. But maybe January, this market just might retrace itself a little bit. And maybe not. So we don't know. We just have to wait and see. The key is to fill your portfolio, stay invested, and fill your portfolio with good stocks. If you want to hedge, we have methods of hedging, and we could hedge a little bit in case the market does go down, and we can make a few bucks on the hedges, and then we can buy more stocks when we see a bottom or when the hedges have made enough money that we can trade them in and buy stocks. We'll get those signals when they come. So meanwhile, go out, have a great weekend, get into the holiday season, folks, and get out there, be with your family, be with your loved ones, and most of all, stay safe. And folks, guess what? We'll see you back here in a couple of days.